All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today's July 18th, 2025. The top story this morning, we've got earnings from a couple of big companies, a couple of economic bellwethers, if you will, and they're actually pretty good. The economy is showing some pockets of strength. First up, we've got American Express reporting this morning, and it was a beat on the top and bottom line. Look, the wealthy are spending. The wealthy are doing great. Isn't that such a relief to everybody? Let's see. Build business, otherwise known as total transaction volume, $416.3 billion versus $412.8 expected. A lot more money got put on the Amex. The CEO is attributing that to record card member spending, especially among their premium products, which is like their platinum cards, which tends to be your wealthier consumers. I am not at all surprised to see this. Look, the wealthy are doing exceedingly well. We're in an asset bubble. Virtually all asset classes are at all-time highs. Those assets are owned predominantly by the wealthy. And so they're out there spending more money, taking more vacations. So you can see that in Amex's earnings. Pretty good numbers from them this morning. We also got pretty good numbers from Netflix. Their earnings and revenue beat. Revenue up 16% year over year. Net income up 48% year over year. It was a really good quarter from Netflix. So what happened? Netflix has some serious margin expansion going on. They raised their prices at the end of last year. They also started doing their ad-supported version, so they're making some ad revenue now. Now, they're saying that they saw continued member growth, but we don't know what that is because Netflix stopped. If you may recall, 2 quarters ago, they said, we're not going to report our subscriber growth counts anymore. And that was really the statistic that everybody really wanted to see with all the Netflix earnings every quarter. It was, is that top-line subscriber head count growing? So since that is no longer being reported, people are kind of left to fill in the blanks with their imagination. But it looks like that price hike led to margin expansion. Also, the weaker dollar contributed quite a bit to Netflix earnings. If people are paying their subscription cost in Japanese yen, and then all of a sudden the yen strengthens against the dollar because the dollar gets weaker, well, when you convert those yen back over to dollars, it makes your earnings grow, even though the yen price didn't actually change at all. So a little bit of currency tailwinds for Netflix as well. Now, interestingly enough, the stock is down on this rather spectacular quarter because Netflix warned that they're probably going to see some margin compression in the next quarter because they're expecting some higher content costs. You've got things like Stranger Things, the last season, are coming out in the next few months here, and they're expecting that to take a hit or to hit some of their expenses, and they're also going to spend a lot more money on promotions for those things. So Netflix stock is down despite the stellar quarter. 3M also reported really good numbers from 3M. The stock is at a 4-year high this morning on this news. Profit outlook was increased due to a reduced tariff impact. First thing, the market's showing strength in adhesives and electrical markets. That's your data centers. They're building data centers all over the country, and they're using 3M tape and 3M lubricants and lots of 3M products when they do that. They also saw a lot of strength in aerospace and defense. That's military spending. Not surprised there. We're seeing a lot of money be spent in that category. They did report some softer demand among car makers. Also not surprising. We've seen Nissan has posted some pretty rough stories, some rough headlines over the last few months. They're shutting down plants in the U.S. We also had some pretty bad headlines from Renault earlier this week. And they're also reporting consumer discretionary weakness, a soft demand in consumer discretionary. So that last bit there, the weak automakers and the weak consumer discretionary, that is the gray lining to the silver cloud this morning, if you will. While the Amex numbers look great, the Netflix numbers look great. Look, what 3M is showing is people can't afford cars, and so the car makers are building fewer of them rather than building cars people can afford. And consumer discretionary is not doing well, even though the wealthy consumers are spending a lot. Most consumers aren't. So if you read past some of the headlines, you can see some of that underlying weakness that we've highlighted on this channel for the last couple of years or so. We got some other stories this morning. Chevron has won a massive lawsuit over Exxon Mobil. That's pertaining to Chevron's acquisition of Hess and access to some of those areas offshore in Guyana, the South America region where they discovered oil in the last couple of years. Pay attention to that story. Maybe it's not huge news today, but something tells me sooner or later the Venezuelans are going to get froggy down there, and it's probably the next place young people will be sent to die fighting over oil in Guyana. Who had that on their 2020s bingo? It hasn't happened yet, but it could. Also going on this morning, interesting story this morning. There's more Amazon layoffs, this time at AWS, Amazon Web Services. That's a cloud computing segment. Now, AWS has been like their strong suit for the last couple of years. All their revenue growth, all their profit lives in AWS. That's where all their AI investments are. And now they're laying people off. Now, they're not providing a lot of color, a lot of information on what's going on here. Are they replacing them with a chatbot? Are they laying people off to save money so they can keep buying GPUs aimlessly? I don't know. All I know is Amazon has laid off 27,000 people in the last couple of years, and now you can add a few hundred to that count. We've also got more China stimmies are incoming this morning as consumption numbers continue to disappoint in China. Not surprising, considering the tariff impact and what its effect on employment may be in China. And of course, the wealth effect, as Chinese housing is worth much less than it was several years ago. That makes people feel poor. And when people feel poor, they spend less. Shocker, I know. And we also got this weird story from Wells Fargo. This is kind of interesting. A Wells Fargo executive was not allowed to leave China. Get your tinfoil hats ready for that one. I'm not so sure what's going on there. And last but not least, we've got Japan's election over the weekend. I have no horse in this Japanese electoral race, so I'm not going to weigh in on the political parties or anything. But no, regardless of who wins, there is worries of a blowout in Japanese government deficits, which means worries of a lot of new issuance of Japanese government bonds. And you better believe that interest rates in Japan will play a major role in the performance of your stock portfolio here in the U.S. and the economy as a whole. So just keep an eye on that Japanese election story, especially Sunday night before you go to bed. Check in on what's happening in Japan. Might be some fireworks over the weekend. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance this morning. And hey, don't forget that like button and the subscribe button for the algorithm. If you're new here, come on back tomorrow and have your coffee with the melon heads because we do this every day. Right now, we've got the S&P is higher by about 16 points or 0.25%, looking pretty good this morning. We've got the Dow is also higher by 122 points, also 0.28% in the black or the green. And the NASDAQ is up a little bit less, 0.16% higher, up 37 points. So stocks are looking pretty good this morning on some relatively strong earnings reports. The dollar is a little bit weaker here, 98.25. That's down 40 basis points. It's actually pretty substantially lower. Possibly one thing contributing to the weakness in the dollar this morning is this story. Waller says Fed should cut rates now with labor market on edge. It seems Fed Governor Waller is throwing his hat in the ring to get the chair position here by being a dove, which is exactly what the Donald wants him to do. Federal Reserve Governor Christopher Waller said policymakers should cut interest rates this month to support a labor market that is showing signs of weakness. With inflation near target and the upside risks to inflation limited, I don't agree with either of those caveats. We should not wait until the labor market deteriorates before we cut the policy rate, he said on Thursday in the text of a speech prepared for an event hosted by the money marketeers in New York. I believe it makes sense to cut the FOMC's policy rate by 25 basis points 2 weeks from now. Fed officials will gather in July 29th and 30th in Washington. Waller's remarks set him apart from most of his fellow policymakers who have characterized the employment landscape as still solid. Looking across the soft and hard data, I get a picture of a labor market on the edge, he said. So he's being a little bit alarmist about the labor market here. Look, I don't think the labor market is particularly strong. We're not seeing real wage growth. And so if we had a strong labor market, we would be seeing real wage growth. But at the same time, we're not seeing layoffs in massive numbers. Yeah, we got the headline about AWS today, but it's, we saw it yesterday in the initial jobless claims. They're low. You do have a buildup on the continuing claims. I don't think the labor market is particularly strong, but I also don't think it's terribly weak at the moment. And I certainly am not in favor of rate cuts, but it looks like Christopher Waller fancies himself the next Fed chair. And so he's out here calling for rate cuts. I still think the Fed probably doesn't move in July. Also going on this morning in the bond market, we got yields lower on the long end and higher on the short end. The 30-year Treasury, 4.989. That's off by 2.5 basis points. The 10-year is at 4.425. That's down almost 4 points. The 2-year is down 5 basis points at 3.867. Big move in the 2-year here. And the 1 month is higher by a fraction of 1 point at 4.316. So we got a little bit of movement in bonds here. And looking at commodities, we've got a lot of green. That's that weaker dollar most likely, starting with gold, which is higher by $20 or 0.62%, $3,359 for spot gold. And then my favorite of the shiny, silver, is up by 17 cents or 0.45% higher for spot silver at $38.30. Also notice with silver, we've got the front month silver contract is up by 32 cents, while spot is only up by 16 cents. So we're seeing that EFP premium start to grow again. We saw it contract for most of this week. That's interesting. Possibly that EFP premium blowing out. That could be indicative of some of that stress in the London markets that Bob Coleman talked about yesterday in our interview that we did. Shout out to my friend Bob Coleman from Idaho Armored Vaults. Check out that interview, guys. We did our best to try to explain the big difference between the paper market, which is ripping in silver right now, and the physical market, where the dealers are actually in rather dire straits because everybody's selling their metal, and so they're cash light. It's kind of interesting dynamics playing out in the silver market right now. So check out that interview, and it might help explain why we're seeing that front month future move twice as much as spot. But regardless, I like the shiny. I got my silver gold bull 10-ounce bar that I bought at spot here. That's what I'm gonna flash this morning. We've got copper is higher by about 0.2%. Platinum is up 1.5%. Palladium is up 3%. And West Texas Intermediate crude is higher by 1.15%, $68.32 for August WTI futures. Looking over at Bitcoin, we're pretty much right where we were yesterday, 118,957 as priced on Coinbase. We continue to consolidate just below that 120,000 threshold that we hit late last week, or I should say late last weekend. Interesting enough, though, 3 crypto bills approved by the House. Why investors are hopeful: the Genius Act, Anti-CBDC Surveillance Act, and the Digital Markets Act, Digital Asset Market Clarity Act. My goodness, who cares about the name of the bills anyway? They were all passed by the House on Thursday. U.S. crypto investors moved a step closer to getting more regulatory clarity after the House of Representatives voted to advance 3 pieces of crypto legislation on Thursday, with one of them expected to be signed into law soon. Since the Genius Act, the bill aimed at regulating stablecoins, already passed the Senate, the House vote now sends the bill to the executive branch to be signed into law. Stablecoins are a type of cryptocurrency whose value is pegged to another asset, often the U.S. dollar. The Anti-CBDC Surveillance State Act, as well as the Digital Asset Market Clarity Act of 2025, still need to be voted on by the Senate. So a little bit of forward motion in crypto week yesterday. One of those votes is on its way to President Trump's desk. Also on its way to President Trump's desk are the spending cuts that we talked about yesterday. Trump's cuts to NPR, PBS, and foreign aid clear Congress. That actually happened pretty quick. We talked yesterday about how it passed the Senate. Well, it sailed right through the House. The Republican-controlled House voted 216 to 213 to give final passage to a bill cutting $9 billion in spending that had already been approved, sending it to President Donald Trump to become law. Guys, this passed by a 3-vote margin in the House of Representatives, just cutting $9 billion. They almost didn't pull it off. That is amazing. We are never going to get out of this spending problem. The cuts aimed at public media and foreign aid passed in another middle-of-the-night vote on Capitol Hill one day after the Senate voted 51 to 48 after 2 a.m. Thursday to approve the measure. 2 Republicans joined all Democrats in opposing the package in the House. That's Reps Mike Turner of Ohio and Brian Fitzpatrick of Pennsylvania. So, yay, congratulations, Congress. You cut $9 billion in spending. Oh, my God, you must be exhausted. You've accomplished so much. Do note the sarcasm. All right, let's talk about some of the earnings we got this morning. Netflix posts earnings beat as revenue grows 16% in second quarter. It was pretty impressive numbers for Netflix here. Netflix posted an earnings beat Thursday as revenue grew 16% during the second quarter of 2025. The company updated its full-year revenue forecast, noting that it expects revenue to be between 44.8 and 45.2 billion, up from a range of 43.5 to 44.5 billion. So they're raising their guidance. The higher forecast reflects the weakening of the U.S. dollar compared with other currencies, as well as healthy member growth and ad sales, the company said in a statement. Notably, this is the second quarter that Netflix is not releasing quarterly updates on subscription data. Year-over-year revenue growth was primarily a function of more members, higher subscription pricing, and increased ad revenue, the company's CEO said. Netflix emphasized its second quarter operating margin of 34.1%. That's an improvement of nearly 3 percentage points from the prior quarter and of nearly 7 percentage points from a year earlier period. Well, higher prices, higher margins. However, it warned that operating margin in the second half of 2025 will be lower than the first half due to higher content amortization and sales and marketing costs associated with our larger second half slate. This is likely why shares dipped around 1% in after-hours trading. So honestly, I think when they talk about higher content amortization and sales and marketing costs, I think it's Stranger Things is what they're saying. Stranger Things is an expensive show to produce. It's one of Netflix's biggest hits. They're going to spend a ton of money to promote it, to try to squeeze as much sales as they can out of the final season of that show. And so that's going to put a little dent in their margins for the next half. And that is why Netflix is down despite the excellent quarter here, off by $21, trading at $1,253.10 or 1.65% lower. Also on the earnings front this morning, American Express beats estimates as premium clients keep spending on cards. The rich are doing very well. American Express's billed business on its cars and other products outperformed expectations in the second quarter as its affluent customers continued to spend. Billed business or transaction volume on credit cards and other products issued by Amex totaled $416.3 billion on a currency-adjusted basis for the 3 months ended June, topping analyst estimates for $412.8 billion. We saw record card member spending in the quarter. Demand for our premium products was strong, and our credit performance remained best in class. That's according to CEO Steve Squeri in a statement on Friday. Total revenue minus interest expense climbed 9.3% to $17.9 billion, driven by increased card spending, greater net interest income on higher revolving loan balances, and growth in card fees, Amex said. So the high-end consumers are high-end consuming at a pretty incredible rate. American Express stock is higher by about 0.5%. Let's refresh this. Oh, actually, it swung negative. That's interesting. $312.98. I'm not sure what swung this to a negative. Maybe the guy said something on his earnings call. I don't know, but it's down by about 0.8% now after being up for most of the morning. And we got earnings from 3M as well. 3M stock leaps toward a 4-year high as lower tariff costs boost profit outlook. Growth was the fastest in 3M's safety and industrial business, while strength in home improvement helped offset subdued consumer spending. Shares of 3M rallied towards a fresh 4-year high in early Friday trading after the maker of Post-it notes, Scotch tape, and Command strips raised its full-year profit outlook after a quarterly earnings beat and lower estimates of tariff costs. For the second quarter, profit and sales rose above expectations as strength in adhesives and electrical markets, aerospace and defense, and home improvement products offset soft demand from automakers and continued subdued consumer spending on discretionary items. I really like that paragraph because it touches on a couple of different pockets of the economy here. All right, strength in adhesives, electrical markets, data center build-outs. They're using all kinds of 3M products to build all those data centers. Aerospace and defense, military spending is on the rise. European military spending is on the rise. They're building weapons everywhere. They're using more 3M products for that as well. Home improvement, that kind of surprised me. Apparently, people spending money to fix up the house. All right, possible signs of strength there. But those things all offset soft demand from the automakers. Again, we've done a lot of coverage of this. The automakers are not doing good in this market here. Their margins are getting squeezed. The tariffs are hurting them. They're reducing production, and so they're using less 3M products. And subdued consumer discretionary items. I don't know what consumer discretionary items 3M makes. Maybe consumers are using less discretionary Post-it notes. I honestly couldn't tell you, but I'm not surprised to see that because outside of American Express and the high-end consumers, most consumers are still struggling with the inflation of the last few years, and they're having to make cutbacks in their standard of living. And so they're cutting things out because their wages have not kept pace with their cost of living. For 2025, the company raised its guidance range for adjusted earnings per share, which excludes non-recurring items, to $7.75 or to $8 billion, including expected impact from tariffs from $7.60 to $7.90. So that's kind of interesting. They're actually reducing the expected hit they're going to take from tariffs. This comes after the estimated net negative impact from tariffs on earnings per share was reduced to 10 cents from 20 to 40 cents. So 3M is saying maybe we overreacted a little bit initially to how much money these tariffs were going to cost us. Still going to cost us 10 cents a share, but that's a lot better than the as high as 40 cents that we were worried about a few months ago. With execution improving and solid results in the first half, we have confidence in our increased full-year EPS guidance, which now embeds the expected impact of tariffs, said CEO William Brown. 3M earnings, or 3M stock, let's see what we got, higher by 2.4%. It was higher by 3% and change a few minutes ago, $163.01. That's up by about $3.88 this morning. Couple more this morning. We've got Chevron prevails in their Exxon fight and are sealing a $53 billion Hess deal. Apparently, this lawsuit had been going on for quite a while here. Hess Corp won its arbitration battle with ExxonMobil, clearing the way for it to be bought by Chevron more than 20 months after the $53 billion deal was announced. The decision is a major victory for Chevron, ending a period of strategic limbo that hurt its stock and prompted questions over the quality of the company's due diligence when it agreed to buy Hess in October of 2023. Chevron CEO Mike Wirth said he would walk away from the deal if they lost the case. A representative for Exxon confirmed Hess and Chevron prevailed, as the company said in a statement that they disagree with the ICC's panel interpretation, but respect the arbitration and dispute resolution process. The clash between North America's biggest energy producers was unprecedented in modern history of big oil, an industry in which companies routinely partner with each other to minimize project risk and shared cost. Exxon, which operates and owns 45% of Guyana's offshore Stabroek block, claimed it had a right of first refusal over the disposition of Hess's 30% stake. Hess and Chevron, however, argued the right didn't apply because their deal was structured as a corporate merger rather than an asset sale. The uncertainty surrounding the deal has been a material contributor to the underperformance of Chevron's stock price compared with its rivals, Wirth said in November. So at the end of the day, this was about Hess's 30% stake in this offshore Guyana oil deposit, oil reserves. That's what ExxonMobil and Chevron were fighting over. Now, there's already been risks of fighting between Venezuela and Guyana because of this large region of Guyana that is claimed by Venezuela. And go figure, ever since they discovered oil off the coast, all of a sudden Venezuela's like, no, y'all, that's ours. Totally ours. And so I guess the point is, if Chevron and ExxonMobil are going to fight over these oil reserves, then it's not so crazy to imagine Venezuela and Guyana may end up coming to blows over this. So pay attention to that, guys. That's right in our backyard here in South America. We could see some fireworks in that region in the years ahead. But Chevron stock doing all right this morning, higher by 2.9%, $155.90. That's up by about $4. Meanwhile, Amazon cuts some jobs in cloud computing unit as layoffs continue. Amazon is laying off some staffers in its cloud computing division, the company confirmed on Thursday. After a thorough review of our organization, our priorities, and what we need to focus on going forward, we've made the difficult business decision to eliminate some roles across particular teams in AWS. Amazon spokesperson Brad Glasser said in a statement, "We didn't make these decisions lightly, and we're committed to supporting the employees throughout their transition," after we replaced them with cheap labor overseas or chatbots. The company declined to say which units within Amazon Web Service were impacted or how many employees will be let go as a result of the job cuts. In May, Amazon reported a third straight quarterly revenue miss at AWS. Sales increased 17% to $29.25 billion for the first quarter, slowing from 18.9% growth in the prior period. Amazon said the cuts weren't primarily due to investments in AI, but are the result of ongoing efforts to streamline the workforce and refocus on certain priorities, such as investing in AI. The company said it continued to hire within AWS, probably in other countries. Amazon CEO Andy Jassy has been on a cost-cutting mission for the past several years, which has resulted in more than 27,000 employees being let go since 2022. The heads continue to roll in Silicon Valley. Meanwhile, let's shift gears over to Asia. We got a couple of Asia stories this morning. China mulls economy-boosting measures to counter severe situation. More stimmies coming in China. China has a plentiful toolbox to avoid an economic slump in the second half of the year, its commerce ministry said Friday, as he admitted it faced a very severe and complex situation. That's interesting. Jerome Powell used to love to talk about his tools and all the tools in their toolbox to fight inflation in our tools. Don't worry. If inflation, which is transitory, gets out of hand, we can rely on our tools. Seems like China may have some of the same tools. Growth hit 5.2% in the second quarter, official data showed on Tuesday, but analysts have warned that more must be done to boost sluggish domestic consumption as exports face the knock-on effects of a global trade turmoil. Retail sales rose far less than expected last month and were much weaker than May, suggesting efforts to kickstart consumption have fallen flat. We're facing a very severe and complex situation. Global changes are unstable and uncertain, and some of our policies will provide some new responses according to the times and circumstances, said Wang Wentao, who told journalists at a briefing. Our toolbox is plentiful, and we will be fully prepared with plentiful tools, apparently. Asked specifically about China's reliance on exports, Wang suggested the government was preparing policies to further stimulate the momentum of our consumption development. No way, no how China is going to consume their way out of the reduction in exports if these tariffs get out of control, as they seem to be doing. You're not going to be able to stimulate internal consumption, especially not when everybody's broke because the entirety of their net worth was in their house, which has dropped in value substantially because of the Evergrande fiasco and the overbuild in China's real estate. China's economy is improving. No, it's not. And the long-term fundamentals have not changed. The consumption market's characteristics of great potential, strong resilience, and vitality have not changed, he said. Yes, a number one economy. Wang also name-checked Beijing-based toy maker Pop Mart, whose Labubu monster dolls have become a must-have item internationally, adorning the handbags of celebrities such as Rihanna and Dua Lipa. We are also promoting new forms of consumption. For example, Pop Mart. These kinds of new trends, new fashions and styles, the Labubu phenomenon has swept the world. And guys, I have a Labubu story. It's kind of long, so I'm not going to say it on the live stream. Maybe we'll do a Labubu video. Labubu, not Lafufu. There's a difference here. It's very important here. It's Beanie Babies, guys. That's what it is. But interestingly enough, Pop Mart is supposedly worth more than Mattel and Hasbro combined because of these freaking Labubu things, which are these stupid little demon dolls. They look like Where the Wild Things Are, and apparently grown-ass men are wearing these dolls on their clothes as a fashion statement. I kid you not. All right. Ride that rocket, China. Yep, Labubu. Forget the fact that there's entire cities that nobody lives in. You got that Labubu thing going, so ride that rocket, baby. Good luck with that. More STEMIs are coming in China. And last but not least, we're going to need this one for this story. Wells Fargo suspends travel after employee exit ban. We definitely need the tinfoil hat for this one because something here doesn't smell right. Wells Fargo has suspended all travel to China after a banker was blocked from leaving the country, a person familiar with the matter told Reuters on Thursday, causing broader anxiety about the risks of travel in the country. The U.S. banking giant's Shenyu Mao was subjected to an exit ban after she entered China in recent weeks, the Wall Street Journal reported, citing people familiar with the matter. We are closely tracking the situation and working through the appropriate channels so our employee can return to the United States as soon as possible, Wells Fargo said in a statement emailed to Reuters. Now, here's where this gets a little fishy. China's foreign ministry spokesperson Li Jian told a press briefing on Friday that he was not familiar with the Wells Fargo matter, adding that China was committed to providing a welcoming environment for foreign companies to do business. So apparently there are people familiar with the matter who spoke on condition of anonymity, but China's foreign ministry spokesperson is not among those people familiar with the matter because he's saying he is not familiar with the matter. Are we all familiar with this matter now? Now, interestingly enough, why the Chinese are like, we have no idea what you're talking about. What Wells Fargo executive who wasn't allowed to leave? Listen to what our guys are saying. A senior Trump administration official on Thursday said they could not comment on the reports of Mao being refused permission to leave China, citing privacy considerations. Say what? Privacy considerations? I don't remember any privacy considerations when Brittany Griner wasn't allowed to leave Russia because of the stupid vape that she had in her bag. And then we had to trade the merchant of death in order to get her back, the national treasure that Brittany Griner is. I don't remember any privacy considerations in that story. So we've got the Chinese are like, what Wells Fargo executive? And then the U.S. is like, we can't talk about that because of privacy concerns. Both of them are lying. This reeks of espionage, guys. I don't know what actually happened here, but you got a high-level executive at a G-SIB bank, goes to China for whatever reason and is not allowed to leave, and both governments are getting all dodgy AF about it. Kind of interesting. We may hear more about this story in the coming days. By the way, Mao was born in Shanghai and is based in Atlanta, according to a June 2025 release from FCI, where she serves as chairwoman. FCI, formerly Factors Chain International, is a global network of companies that do business in factoring and financing of trade receivables. Interesting. So she does banking trade business. She's a Chinese-born, I don't know if she's an American citizen. I'm assuming she's an American citizen. But this is kind of an interesting story, guys. I suspect there's more going on here than we're being told. Much more. And last but not least, we got the election in Japan this week. Inflation is going to play a role in this election. I don't know how it's going to go. To be honest with you, I don't really care. I don't have any horse in this race. But food is once again a hot election issue as Japan goes to the polls. The current governing party in Japan is wildly unpopular because the price of rice has more than doubled in the last year. And go figure, when food gets twice as expensive, people get pissed off. And, well, probably not looking good for the ruling party. But here's the thing, guys. The Japanese bond market has been pretty noisy the last couple of weeks anticipating this election because if one party rules, there's going to be helicopter money to offset the higher food prices. And so helicopter money means more government borrowing and probably more Japanese money printing in order to enable that government borrowing. Now, if the other party wins, you're probably going to see tax cuts in order to, relieve the pressure from this inflation. Well, if taxes go down and there's no growth in the economy, which Japan hasn't really had any economic growth in years, then government revenue is going to go down. And so the government's going to have to borrow more money and the central bank will have to print more money to enable it. Either way, you're probably looking at more stress in the Japanese bond market. So pay attention Sunday night when these Japanese election results come in. See what the Japanese bond market does. We may be talking about this one on Monday morning. Just a heads up. And I just want to say thank you very much to Uncle Fedster. What's going on, Uncle Fedster? He says, great interview with Bob on a complex subject. Precious metal dealer Tim from Yankee Stacking. I love that channel, by the way. He mentioned running out of cash every day buying metals. Yeah, if Yankee Stacking and what's the other one? Silver Dragons. Both of those, they're like silver stacking channels, and they always go into coin shops and they talk to the dealers. They talk about how there's so much selling going on in the metal space. They're buying so much inventory. They're sending it to the refiners because there's not enough demand to be buying it back. So they're trying to recover their cash. And I can tell you, based on my trips to the local coin shop, it's in line with what Tim is seeing in Yankee Stacking. I did get some comments in that article yesterday. A couple of guys saying their local coin shops have very little physical silver in inventory. So, that's worth considering. It's not the same story everywhere. There may still be pockets of strength in the metal market, but you definitely have a bifurcation, guys. You've got a short squeeze playing out in the paper market, or at least a potential for a short squeeze to play out in the paper market. Meanwhile, the physical market has ample supply. They're actually short of cash in the physical market. It's pretty much the opposite of 2021 and the silver squeeze is really what it is. So thank you for the kind words, Uncle Fedster, and thank you for supporting the channel. Also, shout out to Yankee Stacking. Charles G says, if CPI is up and PPI is down, does that mean that the companies are using tariffs as an excuse to raise prices without being hit by tariffs? It doesn't necessarily mean that, Charles, but I'm not saying it isn't happening. I think if companies think they can get away with raising prices because of tariffs, they will, even if it's really tariffs or not tariffs causing that price increases. They'll raise prices as much as they can until the market rejects them for it. That is pretty much how things always are. People don't get more or less greedy because tariffs are here. So I'm sure some companies will try to use tariffs as a smokescreen to raise prices that they didn't otherwise have to. Now, on the subject of PPI, this is pretty interesting. I didn't know this. PPI does not include import prices. I didn't know that when I read those PPI numbers earlier this week. And I remember saying, this doesn't make sense. PPI shouldn't be so low. Tariffs should be driving PPI higher. We saw a little bit of tariffs showing up in the CPI, but PPI doesn't include imports, and therefore PPI doesn't include tariffs. So that explains the big delta between the increase in CPI and the decrease in PPI because tariffs aren't counted there. So I think that probably does more to inform the spirit of your question more than what you were actually asking. But I didn't know that imports are not included in PPI. Thanks again, Charles. Robert Feeds the Machine. Thank you for supporting the channel. He says the plan seems to be to transition the economy to use some crypto coin and print away the debt once nobody uses dollars anymore. I can tell you stable coins is absolutely about the bond market. You are right on the money there. This Genius Act legislation requires stablecoin issuers to keep their assets that offset their stablecoin liabilities in a U.S. regulated big GSIB bank, and the very strong limitations on what they're allowed to put that money into, in particular U.S. treasuries. So when people buy stablecoins to buy Bitcoin or for whatever reason, that money is winding up in the bond market. It's winding up lent to the government. So this is a potential new source of liquidity for the bond market, which could potentially see borrowing costs go down. But really what they need this to do is offset foreign lenders who are no longer borrowing U.S. treasuries, like foreign governments. They've all been net sellers for the last couple of years. So stablecoins is about a new source of liquidity for the government to borrow money from. Abso-freaking-lutely. And by the way, you are going to see every bank, every big company, they're all going to issue their own stablecoins, and it's going to get messy, guys. I don't know if it's going to be good or if it's going to be bad. I'm skeptical of anything involving the government and the banks, but I can tell you it is definitely going to get messy. There's going to be stories out the wazoo of everyone and their brother launching their own stable coin. But at the end of the day, it could mean more money flowing into the bond market. Thank you, Robert, for feeding the machine this morning. Armando Reyes says, so the IRS is going to be taxing stable coins and CBDC. I don't think they'll be taxing them, to be honest with you. That makes no sense. There's nothing to tax. It's a fake currency. I haven't heard anything about the IRS taxing stable coins. I don't know how you would tax stable coins. It's pegged to the dollar, so there are no gains. There's nothing to tax. So I honestly, I don't know how that's going to work. Now, maybe the IRS will be taxing the income of the stable coin issuers, because the issuers of the stable coins will be making money, because it's basically a treasury or a bank account where you don't have to pay out any interest. Actually, the language of the bill explicitly forbids them from paying out any yield. And so what these stable coins are going to do is people are going to give them the money. They're going to put the money in the treasuries, and then the issuer is going to keep the interest from the treasuries. So they're going to have a lot of profits. Maybe that's what the IRS plans to tax. I do worry about the CBDC thing. That's one of my biggest concerns about the stablecoin legislation. Is, let's say everyone and their brother launches their own stable coin and it's a just total CF, and the government comes in and decides, you know what, in order to provide clarity, we're going to issue our own stable coin to replace all these other stable coins, in order so everybody only has to worry about one coin and it's accepted everywhere, and poof, you've got a CBDC. So this could be a backdoor to central bank digital currencies, which I am most assuredly not a fan of. That's a risk out there that needs to be, you got to be vigilant for this crap. They will try to do that at some point. Thank you, Armando Reyes, for supporting the channel. Nashville Pasta Man says your point about China consuming its way out of debt is similar to U.S. GDP growing as AI increasing efficiencies are taking away jobs. Yeah, exactly. AI is definitely not growing the economy. AI is just debt building up. That's all it is. All of NVIDIA's earnings, it's all financed by borrowed money from companies that burn cash and lose money. So far is almost nothing productive happening. All right. There are some businesses that are managing to use AI to reduce headcount, or at least they're launching pilot programs. But I tell you, there is still no profit there. There is no company that is announcing, due to our use of AI, our earnings per share has expanded by so many cents per dollar or cents per share. That isn't happening. Likewise, there is no AI company saying our chatbot is profitable and we're making this much money from it. They all lose money. So yeah, it's not yet productive. It may eventually become productive, maybe. But right now it is priced as if it will definitely become massively productive. Well, that's a pretty tall order to fill. Let's see. Efficiency. Taking away jobs is another thing. Mostly white collar, middle management jobs. You blue collar guys, you're safe. AI ain't going to replace you. It's the middle managers. It's the button pushers. Yeah, they're at risk. Absolutely. Thank you, Pasta Man, for supporting the channel. Pigo's Trading Desk says, morning, handsome. Oh, shucks, Pigo. You're going to make me blush on the air. Thank you, sir, for the kind words and for supporting the channel. Thank you for being a Melonhead member for 2 months. Good morning to you as well. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate all the super chats, you guys. Thank you for the generosity. Thank you as well to my magnanimous Melonheads on Patreon and YouTube for supporting the channel. You guys rock. Links down below, should you feel so inclined. Don't forget that like button and subscribe button on the way out for the algorithm. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.